Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, we stepped back into the week today and the market is moving up. There was a little scare at the end of last week with the market having a couple of consecutive down days, but with the return of everything into the black, we see the VIX leaking down once again. Right now as I'm speaking, it's touched below 18 and people are coming in and selling protection. They're selling protection in the front month on the Feb 17 puts, they're selling the Feb 25 calls and the Feb 40 calls. In the back months, we listed a new month, July. It's its first day being traded, and we've had a lot of trading in that month. The large order we saw out there was a strangle seller. The July futures trading about 25. They sold the July 20-35 strangle for $3.20. So the hope of that strangle seller is that the July future continues to trade around 25. We get closer and closer to expiration, and some of the premium starts to leak out of that strangle. So they sold it for $3.20. If they hold it until settlement, there'll be a winner anywhere in between $38.20 and $16.80. If they trade it on Vega back and forth, it obviously becomes a more complicated play. Something else I wanted to touch on is we've listed options on VIXY and VIXM. These are velocity shares ETFs. They're very similar to the VXX and the VXZ, but the VXX and VXZ are ETNs. These are ETFs. There are certain obligations that are different. There are certain things that are different between the ETNs and ETFs. Namely, on the ETNs, they're issued by a particular issuer, and they are a debt obligation of that issuer. So VXX, VXZ, issued by Barclays, they are a debt obligation of Barclays, not an instrument in and of themselves. So we have the VIXY, VIXM are the two new products today. We'll see if they get any options activity, and if they do, we'll mention it here. Jamie Tyrrell with Group 1 Option Monster.